Hello, everybody, and welcome to Traders Talk. And this is our second show for the year, and I think the year started with a bang, yeah. And of course, for those who have actually started the year trading, I hope that you have made your gains last week, because we had a lot of positions which have actually given us very good profits, yeah. And of course. We also do share all this with you. We are not keeping all this ourselves. If you follow us on Traders Talk, of course, we share everything about trading, the stock market using options. Yep. So if you are the people who actually want to learn to trade the stock markets, or people who just want to get in touch with what's happening in the stock market, this is the show for you to see. Yep. And of course, we have great things in store this year. We have started a new newsletter on top of our existing newsletter, and of course the newsletter which we actually did, which is actually Quick Bites. Yeah, Quick Bites, and of course Quick Bites is actually one newsletter where we actually share more details about strategies which we apply. We share things about stocks which are more current, yes, which are more current, things that we are actually trading, or things which we have actually traded, so that you can actually get an insight or perspective of how we think and how we actually trade, and how we generate income through trading of the stock market using options. Yeah. So welcome for those who have just joined us, and give me a thumbs up so that I know everything is okay. And of course, please do share and like the show, so that more people can actually hop on to actually join us today. And of course, we will start the show off with some market insights, and of course, after that, we will do a little training. Yeah, we'll do a little training. Of course, trainings are always good. Yeah, whether you are new or old in trading, it actually gives you a bit of perspective about how we trade, and basically what are the reasons, and basically, and also how we can actually best use strategies in certain markets, or in certain stocks. Yeah. So let's get started, and of course, let's see what happened to the market. Actually, the market yesterday was actually, if you have actually look at the market, right, it is actually very bullish. The market actually went up, I think all the way from the opening of the markets. The price of most stocks actually went up. S&P actually also went up a lot, which I will actually show you. Let's put up this. Okay, let's take this up. Okay. But if you look at the price this morning, right? I mean, you would have seen that the market actually had a red candle, a very red candle, a very bearish candle, in fact. Yeah. But as I said, the market yesterday was bullish most of the day. Actually, most of the day, I think towards probably after the second half, then it actually turned the other way, which I can actually show you also. Yeah. Let's see. Let's just put 5 minutes chart. Okay. So this is actually the 5 minutes chart, right? And this is what happened yesterday. So we started the day right here, where we actually opened gap up, right? Very strong. the S&P 500 actually opened about gapping up from maybe 3807, right? It went to 3840. Was this yesterday? No, this was not yesterday. It was somewhere here. This is the one, okay? 9th of January, yep, here. So it is actually here, it closed about 3894, right? 3894. Then it opened gapping up here, yeah. And of course, here you can actually see that it went up all the way from here to here, right? Then of course after that, basically it was all the way spiraling down, yeah. So of course, when it was actually going up, I think at certain levels, we took a shot on the market, right? Then after that, we took a shot in the market. Then of course, when the market continued to go up, right, we was actually stopped out from the trade. But in fact, the market actually went all the way down. Yeah. So of course, what's going to happen this week is today itself, that the Fed chair is actually going to speak at 10 p.m. Yeah, he's going to speak, and of course, I mean, of course, there won't be anything new coming out from the Fed lah. I mean, basically, people would be actually watching how tight are they actually going to continue on the interest rate and and their policies, right? And of course, last Friday itself, the jobs report the non-farm payroll report came out, right? And of course, the additions to the employment, right, actually was more than what was expected. Yeah. So but there was actually one slight thing which also was also reported on that day, which is actually the wage growth. Yeah, the wage growth. That means the wage growth was slightly below expected, and basically that has actually pushed the market up last Friday. Yeah, because if you see on Thursday itself, the ADP non-farm report came out, right, which is basically another what is that? Another organization which actually collates this data, right? The job additions was also more than expected, but the market actually came down on Thursday. Yeah, but of course, when Friday itself, again, the job additions was more than expected, but market actually went up. So I was actually confused why why the same kind of similar data came out, but the market direction was actually totally different. Yeah. So the only difference was wage growth was actually slower than expected. So of course, when wage growth is slower than expected, that actually would help reduce inflation. If you don't get so much money, you won't have so much to spend, right? And of course, if you don't have so much to spend, then of course that will bring prices of things in the market down, and that would actually curb inflation. So that data was positive for the market, and that actually brought the S&P 500 and also the Nasdaq up significantly on Friday. Yeah, but of course, yesterday itself, the rally actually continued only for some hours into the trade, some hours. But of course, after that, it actually went down even lower than before opening. You see, yeah, this was actually the opening. It actually went lower than the opening, which actually ended up negative on that day. Yeah. So that's why you can actually see this bearish candle with a very long tail, This bearish candle here, the last candle here, with a very long tail, which is not so good, yeah. But of course, besides today 10 p.m., yeah, 10 p.m. is actually before market opens. Okay. So of course, that will negate the way where the market is going to go. Depends on how the Fed chair actually what he talks about. Yeah, yeah. So overall, the price action of the S&P, right, was actually quite still very strong within this price level. The 3008 level, which we spoke about, right, was actually still very strong. Yeah, you can see that for about 3 weeks, actually 3 weeks in, we are still actually trading within this 3800 level. Of course, we have slightly breached over the 39 level, yeah, but it did not sustain, so it actually came back down here. Yeah, overall the trend, the long-term trend is actually still bearish. Yeah, for both S&P and also this what is that, Nasdaq. Yeah, okay. So NDX yesterday was actually similar. You can see that when the market opened, the price have actually gap up. Then of course it went all the way to 11,300 plus before actually losing all its gain for the day. All its gain for the day. Yeah, all is gain for the day gone. Yeah, so that's why we did spoke about many times, right? Even when we actually issued our first newsletter, and we did remind you guys, right? If in profits, if you are directional, if in profits, take profits. Yeah, and that actually have to be quick. Yeah. So what we did was during the opening of the year, right? Basically, last week itself, right? Last week itself, uh, the here, yeah, end of December. I think end of December, we also issued when we issued our first quick bites issue, right? Quick bites issue. We actually spoke about Apple, right? We actually spoke about Apple, and then Apple. We were talking about Apple having support at 129, right? And in fact, at this candle here, it actually went all the way to about 124. Yeah, 124. And I think near here, basically, we had actually put in some long-term positions at 124. We also shared that with you guys on Facebook and also on TikTok, that we have actually entered into a long position here. At the same time, we also took a long trade on Apple somewhere, I think during here, I think somewhere during this candle here, which is on last week Thursday. We took a long trade here, and of course. This is actually an option trade. Yeah, we took a long trade here. Of course, after we entered, the price actually even went further down. I think we were taking some losses during the day here. But of course, after Friday was actually very bullish, right? So Friday, the price actually shot up. We did not exit here, but we actually exited yesterday. When Apple was actually, I think, about $2 to $3 up. $2 to $3 up. We actually exited, and as you can see that yesterday itself, from price increase of about $3 right? Apple has actually given up all its profits again. Yep. So of course, what we did was we exited before we went to sleep, right? But it was also quite late yesterday, lah. Yeah. And we took profits. Off the trade, and then after that, it actually came down. So again, when I mean, basically things are still very volatile. Crossing over to 23, things are still volatile. One time you can actually see that the market is up, another time you can actually see it is actually down. Yeah, so that is still the trend, and of course that's the way we still trade. If you make less profits, it's fine, but of course take opportunity to exit. Yeah, like on other trades which we did, other long trades which we did not exit, right? Like the trade on JD, right? Okay, the trade on JD, we also shared this trade, which we actually entered somewhere in early December. Yeah, we actually entered this trade on JD early December, and we spoke about it on Traders Talk. We have also issued the trade on our TikTok channel. somewhere early December. If you have not seen it, you can actually see what is the trade which we actually did. Yeah. And of course, for this trade, we were carrying on this trade. We actually entered somewhere around here, 50, 50, 55, 56, I think, if not mistaken. We actually entered somewhere around here. And of course, last Wednesday, when Alibaba got the news on the approval of Ant increase in paid up capital, right, in capital, then Alibaba shot up and it brought all the most of the Chinese stocks up also on that day, right? I think it was last Wednesday, if not mistaken. And of course, JD popped on that day itself. We thought it could go on further, right? We thought it could go on further. We didn't actually. We wanted to exit, but the price we set for exit was not reached. It's actually, I think, about $20 to $30 more only. Yep. So because of $20 to $30 more profits you won, right? Basically the trade after that, it has lost a couple of $100, because you wanted $30 more and you had to pay it with a few $100 less profits. So again, how to say, make less profit is okay. Yeah, I mean, you can actually exit with a profit, and of course, if the price comes down again, if there is another opportunity, you actually re-enter. Yeah. Similar to the trade on Apple, we actually did the one which we exited was actually the third trade which we did since end of December. That was actually the third trade which we did. So we entered, we exited, then we entered another 2 rounds, and we actually exited all 3 trades just in a space of a couple of days each. Yeah. So it's okay. The opportunity will actually come again. You see, like Apple, the opportunity came back again, right? Came back again many times. This was, I think, one of the trade which we did here. We exited here. It came back again. We did 2 trades here. We exited the trades here. Yeah. So no problem getting in and out. That's why we also tried to how to say, we also tried to change a bit of our strategy and started the quick bites to actually also educate people on actually taking quick small profits. Yeah, which at the end of the day will actually add up to a lot. Yeah. Okay, so those are some of the things on the market, and also on some of the things which we are actually doing right now. Yeah. And we also issued another write up which actually talks about China. Yeah, we actually talks about China. So let me post this up. Yeah, you can actually read about this here. Let me put it on here. Okay, I just put up the article. You can actually go and read the article. If you have actually not read it, and of course, if you have not subscribed it, do subscribe, because once you actually subscribe, whatever we actually shoot out will go out immediately into your mailbox. Yeah. So we are actually talking about China. In fact, we did speak about China all the way back in early December. Yeah, early December. So that's why it's important not to miss our show, because you would not know when we are actually so-called talking about things that eventually will pop. I mean, basically, we look at the markets almost practically every day, right? So basically, we are watching out a lot of stocks, a lot of events, and what is actually what are trades that can have high probabilities, which are all in our radar, all in our watch list. And of course, we also would not know when we would actually want to enter into such kind of trades. Yeah. So of course, when we do share a bit of what we are doing, yeah, for learning purposes, so that you guys can also see how we actually trade it, how we actually think, and what are the rationale. We also try to actually explain it out. Yeah. So this was actually what we actually spoke about on China. Yeah. Back in early December, we spoke about China going to ease lockdowns and all these kind of things, right? Then of course, once that happens, then basically the stocks on the China side, which basically has also went down 50, some 70 or 80%, right? Yeah. Throughout the past 2 years, and of course, the with the easing of the COVID lockdowns and all, and also some how to say changes in their policy, trying to revive their economy and all these kind of things. So the chances of it actually going down, the risk of it actually going down further is lesser than the so-called possibility or the rewards which you actually can get on the upside. Yep, on the upside. So there are certain strategies which we actually apply to actually capture this kind of scenario, and of course, we started to actually explain this way back in early December. Yeah. And of course, during that time, we entered into several trades. JD was one. We also did one on Baba, which we also exited. I think yesterday. We also exited the. Yeah, we also exited the trade yesterday. Again, last Wednesday, Baba had a pop. It continued to move sideways, go up a little bit, and yesterday itself, Alibaba had another 8% increase. And of course, this is actually the stock which is actually listed on the Hong Kong Stock Exchange. Yeah, ticker symbol 9988. The one which is actually listed on the US, I mean the price increase was I think yesterday itself was only about $2 if not mistaken. Yeah, but we did trade the one in the Hong Kong side. Yeah, we actually exited part of the trade. Yeah, we actually exited part of the trade, which we had. We had two short put. We had the two short put together with at the money call back then when we actually entered the stock. Yeah, that time I think the stock was about, yeah, if this was the at the money, basically you're talking about 77.50 when we actually entered the trade. And Baba is trading about $100 today, 9988. So Baba is trading about 109 today. Yeah, 109 today. Yep. So we took profits out, left the short put there, and the short put, basically the premium have almost expired, about less than 10 cents as we saw yesterday. So we just left it there, and we put a GTC order to actually exit at few cents. Yeah. Okay, so yeah, have a read at this. Basically, you can see what is the rationale and what kind of how to say strategies which we are actually putting on based on the current situation on the China side. Yeah, and of course, this is not only on China. There are other stocks which you can actually apply similar strategies, which we did the same also for the Apple trades. Similar strategies which we put. Highly profitable, mainly because of the recent sudden spikes in prices of certain stocks. Yeah, it moves sideways, moves down, moves sideways, and it hit what is that? It hit support, and then it popped once the overall market was actually bullish. Yeah, yeah. So have a read at this Quick Bites. Yeah, Quick Bites is the trade so-called trade analysis newsletter, which we actually issue out on an ad hoc basis, whereas the other newsletter which we actually issue on weekly basis, which is our options trading newsletter. Yeah, which is also on Substack. You can actually, I will post the link of this issue here. you can actually go and have a read at the latest issue. And of course, all the previous issues, all the previous 94 issues, we have also put it uh, up here. And of course, you can also have a read at those old issues. Yeah. So in this current issue, we actually spoke about some technical trainings, which is basically talking about rolling of trades, which is actually one very important skill set which you need to have if you actually want to trade options. Yeah, and of course, if you are talking about just buying calls or doing debit trades, you have basically not much or practically nothing to roll, right? But if you're actually talking about doing credit trades and managing credit trades, then of course, this is a skill which you cannot live without, yeah, because it is sometimes it is a matter of life or death. Either you die in the trade or you are kept alive in the trade, and you can actually also exit with a profit. But only if you know how to actually manage and roll your trades. Yeah, and of course, in this issue, we have actually used an example of a so-called live trade where we got into a little bit of a situation or problem, and basically when with the things which we have actually learned by through rolling of trades, we managed the trade for a couple of days. In fact, a couple of days. Yeah, sometimes you can do it in a couple of days. Sometimes it takes longer. But for this in particular, we manage it basically through 4 or 5 days, right? We actually continuously manage it until we can actually get out from a max loss position into a small profit position. Yeah. So this is actually also explained. You can read this and understand basically. I think after you read this, you probably how to say get at least 60 to 70% of your skills improve, if not more. Yeah, because this is actually quite clear, at least to me. If it is not clear, let me know. Then perhaps one day we will actually do a training on rolling of trades. Yeah. So again, this is the current newsletter which we have issued. Yeah. So yeah, by all means, just go and have a read. Okay. All right. So we comes to today's training, right? Today's training. What is the topic of the training? Okay. Trading behind enemy lines. Yeah. Trading behind enemy lines. Okay. Sometimes when we actually go when we actually trade, right? It's like you are actually going into war, right? Do you agree with me? Yeah. We are actually going into war because we actually take a position, right? We actually take a position, yeah. Whether you are in country A or country B, right? You actually take a position, say in the army, where you actually want to attack the other side. Yeah, if you want to attack the other side, right? Because the other side is that you actually want to win in the trade, lah. Yeah, you actually want to win in the trade and not die in the trade, right? So we are always actually going to war, and of course, what kind of strategies you use going into the war is important. Firstly, you need to actually know what type of strategy you want to use going into a war. Okay, if you are in a so-called war, land war, right? You actually having, let's say, for example, Russia and Ukraine, right? It is technically a land war, right? I mean, it's on land, yeah. So it's either you actually send tanks to attack it, or you can actually send what is that? You can actually send planes or helicopters to actually attack your enemy, right? If you are in the sea war, then of course you are actually only using your ships or your plane. There's no tanks, right? The tanks cannot operate in the sea, right? So yeah, same as trading. I mean, in say environment where it is actually very bullish, right? So in an environment where it's actually very bullish, then of course you can actually go into trades which are directional, or trades which actually give you immediate rewards. Yeah, for example, buy a call, then of course that will actually give you an immediate reward in such kind of environment. In an environment where the market is actually very choppy, right? Very choppy, it goes up and down, up and down, up and down. Then of course, if you're actually doing a call, most likely you will lose in the trade, right? Most likely you will lose in the trade. The decay will actually kill you before you even get the price movement to your direction, right? So of course, during in such kind of markets, then of course it is better for you to actually do trades which give you a bit of buffer, give you a bit of buffer. If it is actually so-called moving sideways and the wave is actually coming down, right? Wave is actually coming down, then of course you can actually do some put spreads, bull put spreads, for example. And of course, if it is wavy, then if it is say in the middle of that wave channel, right, then of course you can do trades like an iron condor, which is basically a neutral trade where you can have the stocks to trade within the range, and as long as it is within the range, then of course you would actually win in the trade. Yep. So basically that is actually how we trade, like going into war. Okay, let me share this over. Yeah, okay. So this is actually trading behind enemy lines. Okay, so this is trading behind enemy lines. Okay, so what I actually want to explain here is let me see. Okay, let me put the pen. Okay, maybe I need to draw. Okay, so yeah, so this is basically what we call the war zone. Yeah, this is actually the war zone. Yeah. Okay, so you are actually in the war zone, and basically this is you. This is you, and of course this is the enemy lah. This is not you, this is the enemy, because I say this is a war zone, right? So war zone, this is actually behind enemy line. This is actually the line, right? This is actually the line. So this is behind enemy line. So this guy is actually the enemy. Yeah. So how do you actually trade, right, in the market? Okay, and we actually want to trade behind the enemy line. Okay, to be safe, to be safe. Okay, so strategies, like I said, which we actually apply. It depends what kind of strategy you are and where you are actually in the war zone. Okay, so for example, if you are actually doing a call or a put, if you're doing a call or a put, you are basically at the border of the enemy line. Yeah, enemy line. Of course, this enemy line, we can also put this as the stock price. Yeah, stock price. You can actually call this enemy line as the stock price. Yeah. So if you're doing a call or put, basically most of the time when we do a call or put, we will buy an ATM at the money, right? At the money, call or put, and of course we are close to the stock price. Yeah. So of course, if the price move to your direction, then of course you win, and of course if the price move against your direction, then you actually lose. Whether on the upside, which is a call, or whether it's actually coming down, if you're actually doing a put. Yeah. And then of course we also call a probability of not dying. Yeah? If you are in war, right? If you go to war, what is the probability? Whether you are coming out alive or you're going to die, right? So if you are in the trade, it's also similar. So what is the probability of your trade when you actually enter into certain strategy? Yep. So for example, if you're doing a call or put, the probability of your win or not dying is only 50-50. Yep. Yeah, you're close to the enemy line, so the enemy can actually shoot you straight away, right? I mean, you're close. Then of course they can use their tanks or they use their guns, and they basically can shoot you. And your probability of dying or losing is actually 50-50. Yeah, if you're actually doing this strategy. Okay. So what are the strategies which we actually want to be safer? Actually want to be safer, and we actually want to fight the war behind the enemy lines. Behind the enemy lines. Like, for example, nowadays with the advance of technology, right, you don't need to actually go into the war zone itself. You don't even need to step into the country where you are actually fighting the war. Yeah, and you can actually see that nowadays they actually use these things like the drones, right? The drones, yeah. Sorry, I failed my ads. So this is actually a drone. So this is actually a drone where this drone is actually operated behind enemy lines. Okay, behind enemy lines, thousands of kilometers away, and they actually send this drone into the war zone to actually bomb this guy lah, bomb this guy. Yeah. So this is actually here coming out from here. It's actually coming out from here. Is sending it in to the war zone to actually win the war. Okay. So in trading, we have strategies also, which we actually trade behind the enemy lines. Yeah, behind the enemy lines, which means that below or above the stock price. Yeah. So of course, below the stock price, we're actually talking about strategies like a bull put spread. Okay, I'm not going to explain a bull put spread. You can actually read it up if you are first time watching this show. If not, then of course we do explain in many of our previous traders talk or our newsletter. You can also refer there what is bull put spread, but easiest you can also Google it. Yeah. So bull put spread, we are actually trading a spread, a credit spread, which is basically below the current stock price. Yeah. For example, the stock price say of this enemy is 100. Yeah. We can actually trade a bull put spread of say 90 minus 90 put say plus say 90 85 yeah 85 put. So this is actually a spread. Yeah, $5 spread. And of course you will win in the trade, of course, if the stock price don't go below 90 lah, don't go below 90. Yeah, so there is actually a buffer right here, basically a buffer of 10%. We have buffer of 10% for you in as a so-called buffer zone into the enemy line. Yeah, you have actually a buffer. Yeah, for the stocks to actually come near you, but at the end of the day, you will still win as long as it don't breaches you and shoot you, right? So this is actually what we call one strategy behind the enemy line or below the stock. And of course, if you are doing a bear call spread, then of course that is actually on the opposite side, where basically you are actually doing a spread above the stock price, Yeah. So that again, you can actually have a buffer before the enemy breaches your territory. And of course, the probability of not dying, right, for this kind of strategy, you can actually set it up higher than 50%. Yeah, because these are actually high probability trades. And basically, if you are actually trading on so-called one standard deviation, right, movement, right, you can actually set it up at roughly about 68% probability. Isn't that great, right? I mean, you go to war, right? You don't have to have a chance of dying, 50-50 chance of dying, right? You actually go into the war right on the start. When you actually take your gun, right, you already have a 68% chance of winning. Yeah, 68% chance of winning the war or the trade. Yeah, so this is again a higher probability, and of course this kind of probability is increased with this kind of buffer to the war zone. Yeah. Okay, all right. Then, of course, there are other strategies which can also give you up to 95% how to say probability. Yeah, you can set it up to 98%, but of course, the higher the probability, the so-called the weaker your bombs lah, because you are further away, ma. Yeah. So this is actually what we call a naked put. Yeah, and you can actually set it up at whichever probability you like. You can do it at 70, 80%, 80%. You can actually do it at 90% if you want. If you want, also at 95%. But of course, the higher probability of winner, the less profit you can actually generate. The less profit you can actually generate. Yep. that is actually the thing which you have to give up lah. You have 95% chance of winning, but maybe you can actually earn $5 from the trade. But if you actually move your probability up to say 80%, maybe you can actually earn say $300. Yeah, $300. Yeah, because you give up your probability and you get compensated by getting more premium. Yeah, because you're actually taking up higher risk, then you actually get paid more. So this is actually naked put. Yeah, but naked put is expensive. Yeah, because if you actually want to fight so-called high probability of easy war, right? Then of course your arsenal or the equipment which you use, right, is actually going to be a bit more advanced and a bit more expensive. Yeah, and why do we say naked put is expensive? Because whatever strike which you are actually selling the put, right? For example, the current stock price is 100. Say if you're actually selling the put at 80, right? $80 strike, right? Then basically what you will need is actually your max loss is actually $8,000, $8,000. Yeah. So of course this is actually high. This is fully cash secured. I mean, we will recommend you to have the cash lah. In case this guy puts up a nuclear bomb on you, yeah, and the stock price goes down to zero. Yeah, stock price goes down to zero. Okay, so if that happens, basically you need to fork out full $8,000 because your stock goes from $100 to zero, and you will need to actually fulfill your obligations by paying whoever bought this put from you by paying them $8,000. Yeah, but of course, if you're actually doing it on the stock, not likely that the stock price would actually go down to zero. Yeah, not likely go down to zero. Then of course there are ways where you actually can actually look at the so-called support resistance lines and all to see whether this strike which you are actually support lines like, yeah, whether this stock which you are actually selling a put will be more risky or less risky. If it's actually trading at $100 here, then of course if you can see that at 80 historically there has been many rounds, the current stock price is here, right? Many rounds that it bounced off 80, then of course the possibility of having a strong support at 80 is high. Then of course it's less risky for you to actually enter the trade. Yeah. So all these kind of things, strategies and all, you have to be familiar with. Take it as if you're actually going to war. Without knowing all these kind of things, I would recommend you to trade with a dummy or a demo account, yeah, to be familiarized with it first, then only go into the real life war zone, yeah, because otherwise we do not want you to actually go in blindly and at the end of the day go into the war zone with the wrong strategy. Yeah. So this is actually a whole full full chart of war strategy. I hope you understand my little Sun Tzu art of war in trading. Yeah. So hope that this can actually make a little bit of sense, especially for those traders who are actually starting up, those traders who are actually new. Then of course this is actually one very important diagram for you to actually digest. Yeah. All right. Yeah, so that's all I have for you guys this week, and of course I do remind you guys that on today 10 p.m. is actually the Fed chair's speech, and of course on Thursday itself it is actually the CPI inflation report for the month of December. Yeah, for December. And of course, in the last rounds, the inflation has actually been coming down lower than expected. And of course, come this round, if the inflation rate is also reported lower than expected, then of course that would actually give a bit of upward push to the market, because that news is actually positive for the market. But again, when the push comes, if you are already in a position, I would advise you to sell or take profit when market is actually strong or on your direction. Yeah, because we would not know that whatever rally that comes with the news, whether it's actually just going to be a bear market rally. Yeah. So all the best for you guys in trading the market this week, and do subscribe to our newsletter if you have not done so, and of course do share to your friends our show, our newsletter, our TikTok, basically everything we have. Please, by all means, share, give us more likes so that more people would actually be able to connect with us through Traders Talk and all our other education contents. Yeah. So until next week, bye bye.